Joining me now is the renowned Dr. Clive Roffey. He's an independent technical analyst on the gold front. Thank you very much for your time.
Pleasure, Bronwyn.
Well, we had the biggest one-day fall in gold in some 5 months yesterday. We went all the way down to $1,198 an ounce, a big retracement, and it looks as though the market is saying that was because we're seeing concerns over the Eurozone subside, and those earlier gains in gold this year were led by the potential fallout in the Eurozone. Is this just a temporary blip in the yellow metals life, or are we going to stay down here for some time, Clive?
You know, I love it, Bronwyn. The gold price has been going up for 10 years from $252 an ounce to $1,250 an ounce, and we get one day where it comes off $45 and everybody has a total panic attack.
And now we're at 1,207 just for
1,207. Fantastic. This is just a hiccup. It's just a minor blip in what is a long-term ultra bull market in gold. And I've been bullish on gold for nearly 10 years now, and there's no reason, as far as I'm concerned, to go anything else but bullish on gold and stay bullish on gold. I couldn't care less if it comes down to 1,150 or if it goes back up to 1,250. The long-term trend is still intact. The upside potential targets are still intact, so I'm staying very, very happy and very quiet on the sidelines.
I'm very interested in your upside targets. I've got the likes of Jeffrey Nichols, who's the MD of American Precious Metals Advisors, coming on the show regularly and saying we're looking at $3,000 an ounce in gold before the end of the year. We've got other forecasters out there, and it looks as though there's general consensus among the metals commentators that we will see gold going through $1,300 an ounce in the second half of this year as fear persists in the general market. So where do your targets lie?
My initial target, which I detailed some, I don't know, it must be over a year ago, was 1285. Well, we've hit that fairly close. I think if we go through 1285, then certainly you're looking through 1300 by the end of the year. I wouldn't go so far as to say 3,000 at this point of time. Frankly, let's get through the levels as they tick off. Let's get through 1285 before we start talking of 14 and 1,500 or even 3,000. Forget about that. I'm not even interested in 3,000. Let's get through the 1,500, 1,600 before we even think about 3,000. I'm not going to go on record as saying long-term 3,000 at all. Certainly 1285, certainly the probability of 1,350 as far as I'm concerned. So I'm very, very, very happy.
And do you put a time frame to that 1,285?
No, I'm not putting any time frames at all.
Talking to a couple of technical analysts, 1,178 on the downside appears to be a key level. Does that feature in your life?
Well, we've been virtually there, $11.98, $20 out. I'm not too keen. I've got no major support levels on the downside that concern me at this point of time. The main trend that's been intact now for well over 2 years is on the upside. It's still rising, it's still intact. Whilst that trend remains intact, I'm very, very happy. I have no problems with the gold price whatsoever.
Let's look at the gold stocks. We've got Goldfields at around about 100 Rand, up over 2/3% today. We've got Harmony up 1/4% at 80 Rand, and Anglo Gold at 319 Rand, down just 2/3%. And you would anticipate, with an enormous drop in the gold price, I come back to the biggest one-day drop in 5 months, we would have seen these gold stocks all at the bottom of the top 40 today.
Well, they came off a little bit in the opening, and then they've recovered. So I mean, this is ridiculous, isn't it? $45 on the downside, and some of the gold shares are actually going up. So it tells you that there's a dichotomy here. I think let's go back to square one. Let's go back to the gold price. What we've seen over the last 10 years, whether people like it or not, whether investors like it or not, whether fund managers like it or not, the top performing asset class over the last 10 years has been the dollar gold price. It's outperformed every stock market in terms of general equities. It's outperformed every currency in terms of currency movement, so that the dollar gold price has been, for the last 10 years, the top performing market system. So I see no problems with that going forward. When we look at the gold shares, obviously the gold shares have underperformed and underperformed substantially, particularly relative to general equities. We had a bottom in April 2009 in general equities. We had that big rally up for the year through until April of this year. But from April this year, don't listen to me, go and look at your pictures, and you will find that the gold index has outperformed every other index in the market since April for the last 3 months. Once again, I'm turning around and saying, yes, we are now moving into a big gold bull market as far as the shares are concerned. I couldn't care less what the fundamentals are, and it's underground mining, and it's this, and the costs, and the deep level.
Are so expensive, and they should all be written off. And
that's a total waste of time. It really is, as far as I'm concerned. Let's look at the prices. Let's see what the prices are doing relative to the competitive entities in terms of general equities. And what we find is that gold share prices are outperforming even the retailers, even the ShopRites, even the Massmarts, even the Mr. Prices, all the favourites. Whereas my analysis of the equity market, frankly, you don't want to hear. I'm more than happy to stay with the gold market, because the equity market, as far as I'm concerned, is a total and utter waste of time at this point in time.
What about the smaller gold miners and the level of risk associated with playing these stocks? Would you go in?
You're going to have a higher level of risk. The smaller the mine, yes. But if it's a gold bull market, the whole darn lot will go. Obviously, like any market, some will move quicker, some will move slower. It's exactly the same with the bear market that we're in equities at the present moment. Some are falling quickly, some are falling slowly, some are just leveling out at the top before they fall down. So in that market, yes, if you go for the penny stocks and the small gold miners, you are assuming a higher level of risk. But I don't believe that risk is ridiculous at this point of time. I think it's an acceptable risk level.
Which of the smaller gold miners would you in particular focus on?
I would be looking at GB Gold, Great Basin Gold. I think that's one which looks interesting to me, particularly on the technicals. I'm more than happy with that.
And if we go back to the majors on the technical front, between a Harmony Goldfields, Anglo Gold Ashanti, should you be picking one?
6 of one, half a dozen of the other. Stick a pin in it. It doesn't make any difference. I think you've got your dichotomy comes between the ETF, between new gold and those shares. Are you going to go for the gold bullion aspect of it, or are you going to go for the gold shares aspect of it? Theoretically, now I'm talking theoretically, if it's a true bull market in gold, the shares should outperform the bullion angle. So therefore, the shares should outperform new gold. At the moment, they're not quite doing it.
Irrespective of the fundamentals.
Irrespective of the fundamentals.
Coming back to gold, the physical metal.
Yep.
Last night we had a discussion on the Business Tonight news desk with Alan Demby, the executive chairman of the Gold Coin, the South African Gold Coin Exchange. He says that physical gold, Krugerrands, there's big demand out there for gold coins. Would you go that route and accumulate, or do you have piles of gold under your bed?
If you go back over the last 8 or 9 years, on the analysis that I've done and the public utterances that I've made, you will find in nearly every one of them I've said you need to buy Krugerrands. Not the numismatic variety. I'm not going to pay an extra R1,000 for a bit of polish on the darn coin. Nor am I going to pay ridiculous commissions on those coins either. I'm going to buy them.
Where do those commissions stem from? Because that was also part of the discussion last night.
Well, this is all the sales business. If you're going to buy those coins, you buy them through your stockbroker. That's the end of the time. But the gold coin, the Krugerrand, as far as I'm concerned, is an unbelievably safe type of investment. And I've been saying this for years, and I have absolutely no reason whatsoever, Bronwyn, to alter my opinion on that.